Credit score explanation. How exactly are you supposed to read your credit rating and exactly figure out the credit report, what it exactly means? I'm going to share you some examples and some tips on how you can go about doing this. Now, you got to keep one thing in mind. Numbers have different meanings. I mean, in school you were given an A if you excel in a particular subject. In the real world, it's a little bit different. If you're given a score of 600 or 700, that could have an effect on your ability to get a loan or not in that case. This is basically your credit score. And to give you an idea, here's an explanation. The credit score is an indicator that tells lenders if you'll be able to pay the amount that will be loaned out to you. The scale goes from 340 to 750, and the higher it is, the less risk the lending institution is taking because they know you'll be able to pay for it with interest. If your score is below 700, you can still apply for the loan, but expect to pay at a higher interest rate, and this is the only way that the lending institution can be sure you will be able to pay them back. Now, your credit score is calculated based on several factors. 35% of the total score is based on your credit history alone. You could get a perfect score here or have a few deductions if ever you have had any late payments or bankruptcies. The more recent it is, the greater the deduction is. So, for example, if last year's, if you had a lot of delinquent payments, they will have a bigger effect than to the delinquent payments that occurred, let's say, 5 years ago. Now, moving along, 30% is based on outstanding debt. This may come from car or home loans, credit card bills, or even utilities that haven't been paid. Now, if you use your credit, make sure you only use 25% of the limit or less. So it does not have an effect on your credit score. What I mean by that is that if you're given, let's say, $100 of credit, you should be only using $25 of that credit because that puts you in the safe zone where you're not considered to be overspending on your limit and also you're not underspending to hurt your credit score. Now, moving right along again, 15% of the credit score comes from the length of time that you have had the credit. The longer you have it, the better because this will give creditors an idea of your consumer behavior. So in essence, it gives them more information to work with and to make a better judgment about you as a consumer. Now, like I said, there's several factors that go into calculating your credit score. And in the recession we're living in these days, a lot of people need help in terms of increasing their credit score and their credit ratings. Now, while I've worked in the 3 years in the financial industry, I came across 5 powerful methods that can increase your credit rating by 100 points in less than 1 week. Head over to creditratingcure.com and get your free ebook that contains these 5 methods. I'm giving these away absolutely free, so you can take advantage of it right away. I know it's a recession, money is hurting all of us right now, so make sure you get your ebook at creditratingcure.com. Increase your credit rating by 100 points in less than a week. Once again, head over to creditratingcure.com and get your free ebook.